right. Good early morning, everybody. It is Friday morning, the last day of February. Not a leap year. So tomorrow, Saturday, will be the 1st of March. All right. So let's jump in. And then I want to describe something I'm going to start doing on this. I've done it in a way, but I have a much better way to do it now. So with the KURV funds, this is about KURV. And I always like to compare it to YieldMax because YieldMax has the single stocks for six of the Mag 7, if you will. And so they pair up pretty well. Um, and KURV has done something kind of interesting. They don't call it Group A, Group B, Group C, Group D, but they do call it Week 1, Week 2, Week 3, and Week 4. Obviously, Howard Chan, the CEO who I interviewed previously, great guy. And they're small. I mean, compared to YieldMax with the amount of funds, so their assets under management are much smaller. And he comes from a fixed income background, sort of safe and secure, and worked through PIMCO and some other, um, I think BlackRock. I don't have everything in my mind from the interview. It's been a while, but good CEO, good solid company. What I do like about KURV is a reminder to you guys, and most of you that have experimented with it see it. Much less NAV erosion. I mean, if the markets go down like they're going down now, you're going to get some NAV erosion. But YieldMax, because it tries to pay such a high yield, and oftentimes does, it gives up the NAV erosion. It's one thing, like I always tell people, total return is where it's at. What did I get in yield? Oh, I got 80% in yield. Okay, I got a 20% NAV loss. I can live with that all day. If I get a 60% return, I'm wealthy, right? It's just that I know what a lot of you guys that chase yield, you run out there and you get in Misty and you see, for 3 months, you're getting 140% yield and you're projecting it out 20 years. Well, how about the up and down? How about Misty right now? Right. So you get that NAV erosion, but when you look at a chart like Misty, you say, oh, okay, 19 and 45. I mean, that's a big range. And it hasn't even been out a year yet. In March, it'll be out a year. But jumping back to KURV, so the thing with Howard and the thing with um, KURV is that they write monthly options. So they're not collecting 4 times. So they only have to be right or trending right 1 time in a month out of 4. Whereas YieldMax, every time they do those weekly options, and I know they're moving to spreads and they have moved to spreads. And so Howard and them also have that option. I think Neos is actually doing their work. I have to go back to my notes from the sub advisor that's managing that for them. I believe it's Neos, which reminds me, I got a video coming out on that. I got an update on Roundhill, and then I'm really excited about the growth of my database and what all I'm starting to do with that. And every time I do one of these videos, I'm going to go to that database, do a filtered search, have it ready for you, and then just show you like for like. So that is extremely powerful. I can see all kinds of trends and all kinds of things by having almost like an instant queryable database. So in this sense, let's just jump in here. So KURV, sorry guys, I'm giving you a whole lot of data and some of you just want the numbers, but I do think this is relevant and important. So their Netflix, right, NFLP, and by the way, it took forever to find these. I mean, I kept going on the KURV website. I kept looking at my email subscription. I finally went out to a social media site where they also post, and I found their numbers. I mean, so I'm going to write to Howard when I get a minute, although when you haven't talked to somebody in a while, you hate to send them a, critique, but don't make it so hard, guys. This stuff was declared on 225, and here we are early morning on 228. and I'm just now figuring out to find it. I looked yesterday in the same place I looked today, and it wasn't there. Or if it was there, I couldn't find it. Um, so anyway, again, that's when you're a small firm relative, they don't have the money that a Pro Shares or a BlackRock, and even YieldMax is growing with the amount of funds. But what happens, that can work against you when you're trying to manage so many funds. We all know Jay as a sub advisor with his company. Um, Sometimes when I was watching the daily stuff, their active wasn't what I'd call active. And that's just plain growth, and that's true in the marketplace. You got to have competition. There's a lot of things that need improvement here, but so knowledge is power. So hopefully myself, other knowledgeable people can impart some of this wisdom to you guys, so you guys can continue to make good decisions. We don't make the decisions for you. We just give you a lot of relevant data. So on Netflix, it paid 85 cents, right? Second to Tesla. So how are they doing this? What is this week one, week two? Think of it as groups if you're a YieldMax guy. If you're not a YieldMax guy, I'll explain it to you simple. So they pay once a month, but been this big push from the community of investors, and it's like a taxi driver. The guy doesn't want to sit there at the airport and wait all day, which is 40 miles outside the city, to get a fare. So he'll drive back to the city and he'll drop the meter. They say drop the meter. He's just, because every time they drop the meter, there's a built-in fee plus the mileage rate, right? And the meter. So if you do a bunch of little ones, they add up to a lot. Whereas some guys sit there and go, I only want the home run. I want that 45-mile run to the airport. I remember where I lived south in Los Angeles for years in the Long Beach area. I mean, very few people ever said, hey, give me a taxi ride up to LAX. But they had the vans and the shuttle service and all that. And you talk about, I lived in Vegas area for a while. Um, and that was a nightmare. They didn't have that. I used to have to go find a taxi and go talk to him at a big hotel near where I lived and said, hey, I'm doing an international trip for 3 months and I need to get a taxi. And so, do you mind if I call you? Can you give me a card or a number? And I'll call you because at 4:30 in the morning, I want to be picked up at 5:30, and I don't want to be calling some taxi company and maybe they dispatch somebody and maybe they don't. And I'm gone for a month, and I don't want to park my car at the airport and have the company pay parking for the whole month. So, it's just an interesting dynamic, the world, when we experience a lot of different things. But sorry for going into that. So what people like is people like to get paid weekly. It's that high, the euphoria associated with a paycheck once a week rather than biweekly or sorry, bi-monthly, right? Is how I think my last years I was paid. And that's okay, but once a month it just takes a while on these dividends. Well, so what happened? They're still paying once a month. If you got the Tesla distribution, it was 3 weeks ago. Okay, so next week Tesla pays. Okay, and you can see it right here on the week of 3-4. But what they do is they've got 7 funds and they group 3 weeks where there's two payers. Like in the second week, they're Amazon and they're Microsoft, then they're Apple and then they're Google. And then this KQQ is what they call tech titans. It's a bunch of high tech companies. So, and they pay Netflix. And then Tesla stands alone. So they got two, 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 and one, two, three groups, and Tesla starts it out in week one. And then it just repeats the way Group A and Group B. It's just with YieldMax, they had 7, 8, and now they got a mix of the real weeklies, and they got a lot more of them along with the monthlies. Right now, with these guys, they're all monthly. The other thing that I hear from you guys and I see around the internet is people want Howard to have a fund of funds. Well, I think the issue there for those guys, they want to get the volume up in their current funds. They probably would do a fund of funds, but probably 8 or 10. I mean, I think YieldMax, when they did YMAX, I'm guessing they were 15 or 19. I remember it being at least 19 of the single stocks. Now it's like over 30. And so there's a lot of things out there, people, that you need to look at. But a good payment here and then a 15-cent payment. So what's the yield? This is sort of like yield on cost, but since I'm 2 days late, I'm showing you the price on the day before declaration, which is kind of what I always use. So you can think of this as yield on cost, but it's not current. So the data I'm going to show you and the summary comparing is current. So let me go get to that right now. So not a lot to tell you. 85 cents if you're in their Netflix and 15 cents if you're in their K Titans. All right. So over here is where I work on my database. So rather than take your time with me filtering, I'll just tell you some taxi story that you're like, Bruce, what does that have to do with Curve? Hey, you got to go with the flow, people. All right. So what I did here was I sorted by I only included KURV and YieldMax, and then within YieldMax, KURV, it's everything they have in YieldMax. I only pick the ones that KURV has. Okay, so there'll be an extra one in the KQQ that doesn't. You can't really compare. I mean, you could go and look at a QQQ fund or something. Um, but what I can do is go across all my data gets updated. I'm using Google Sheets in this, but very similar to Excel in terms of sort, filter, all that kind of stuff. But my current price reads all that, my 3 month back, my 6 month back, my 12-month back. You can see here, and then I've got some if error statements in here to clean up where you can tell that this doesn't have enough data to be 12 months. It would say not applicable or divide by zero error. So I just make it say 00. Now, what I can do sometimes is just take this number and annualize it. And I am starting to do that. But let me jump in here to help you guys. So you can see, and by the way, guys, the market, I think this is just the beginning now. I warned you. I was hoping we got a bounce. We look like we got a little bit of bounce with NVIDIA's earnings and then sold off. I think March could be, I say bloodbath, but anything 10 or 15%, we're already down. If you look at a lot of stats, look at 3 month NAV here, look at 3 month total return. That's not a lot. I mean, considering YieldMax pays, look at some of the stuff. So I just wanted to say to you, I'm going to do a video on that. So now with this database, not that I needed the database to do it, but I can look at all kind of alternatives. If you're an income guy and you say, but Bruce, I don't want to go buy puts or I don't want to do this. Well, how about you get in an income that you get rewarded when it's minus 3x on QQQs, right? So instead of being a 3 times long and pays income, it's a 3 bear and pays income. Now, it's not 50%, but I'm going to do an educational video about all that stuff. But a lot of that came out of me just building the database and going back out there again and finding all of the funds that are out there from reputable companies and just ingesting all that stuff. So I'm up over like 120 funds or something to that effect. All right, let me get into the relevant data. So what I would do when I built this just for you guys, I do AMZ and AMZP, so they're right next to each other. But my filter ability doesn't exactly. I can filter by KURV and by YieldMax now that, right, and then I can filter by these, but I can only go so far, and then I can do alphabetical. Well, it doesn't always work out. Like one is called AAPY and the other one's APLY, but you get the gist. All right. So looking here, remember on 3 months, 6 months, 12 month, the yield, everyone has a positive. Now, there's no such thing as a negative yield, right? If you pay something and there was some value that it's based on, that's a positive yield. If I give you 5 cents and you gave me $10 to hold, that's a positive yield. If I give you 1 cent, that's a positive yield. So understand these are always positive. And then um, what gets involved. And so I do little things in here like is a single stock, it's a portfolio, it's BTC, it's technical, it's in the Mag 7. That's what this is, technical Mag 7. This is technical, but it's not really Mag 7. And Netflix isn't a Mag 7. So anyway, so I can sort, I can do so many things with this. It's just really, really good stuff. When does it pay? Well, it pays monthly, but which week does it pay? So, looking at these, what's important is we all know that the last 3 months the market's been hit. Okay. There's just no question about that. Or, sorry, the last few weeks. And it's just not trending up. And I don't think it will for a while. I don't know exactly what's going on. I figure this could be a 4 to 6 week, washout, recover, and that. But at some point where it's such elevated, I don't know if it's throughout the whole year, it's 6 months, we're going to get a comeuppance in a bigger way where the markets suffer. And like I said to someone, we could, I don't see it yet, but I'm talking maybe another 4 or 5 years out, 6 years out, maybe 2032, we could start to encounter what happened from 1966 to 1982 in the markets. And guys, the reason I'm saying this is I'm trying to send a message to you guys that just believe whatever you're generating. Okay, unless you're a swing trader and a nimble and a professional and you do it all the time and you don't care whether it's bear or bull markets, then if you can extract money out of the markets, good on you. And that's what it would take. Okay. But if you guys are just chasing high yield and income, and even if you're DCAing and you're doing all the right things, I mean, the Dow and the big indexes in 1966 to 1982, for that 16 years, it was flat. How would you like to have your money in something and 16 years later, your account's worth the same? Okay. Now options can change that some, but not overcome it. We all see what happens. It's not like Misty's a bad, they're bad managing it. It's just when MSTR crashes, goes down bigly, and no reference to another YieldMax fund there, Biggie, but it's gonna drop. And that's to be expected. All right, so let me get into this. So I can filter on any of this. The thing that I like to look at right away, well, how are we trending in 3 months? Just across, since this is, 7 and 6 funds, right? Um, so what is a 3 month return? Look at this. If it's not green, it's not positive. So Facebook and YieldMax, in terms of a 3 month return, is 9%. Look here on NFLP by KURV, 8.32. Netflix, 8.36. Look at these guys. That is neck and neck. So you would imagine, which is exactly what happens, that the 3 month NAV, look here. So net curve has a positive NAV for the 3 months, just barely, and YieldMax has a -5. But why is YieldMax slightly ahead, 0.04, right of a percent? Because they yield more money. All you have to do is look at the yielding 13.5 in the 3 month yield, and KURV is yielding 8. But that's an example. So let's go up here, and these change all the time. Look at KURV's AMZ and YieldMax is, well, let's just call them what they are. Let's look at KURV's Amazon and YieldMax is Amazon. They're neck and neck, 1.21 to 102. But what I'm drawing your attention to more than anything else is the fact that these aren't very high, this 3 month total return. 6 months jumps up. That's the sweet spot. But 12 months should be double. Always think of this, guys. When you see a 3 month total return, if you annualize that, just multiply it times 4. So that should be 4.08. this should be 4.84. Okay. So this one is doing way better, right? So if you go back and you look at charts and you see that universally, what's that telling you? It's telling you that this, you know, from 3 months old to 6 months old, the market was doing much better, much better. And you can just look at market chart. And here's your 12-month return. So the other thing when I want to look at these funds across the companies is let's look at Appy, let's look at Apple for KURV and Apple for YieldMax. Okay, so YieldMax is over 3 months paying a 6.04 yield, and actually KURV is out yielding them over 3 months. Happens whoops, yeah, it is 604 to 8.6. How's our 3 month total return? Well, you've got a positive 1.06 in KURV, and in Apple, you have a 0.97 negative. Call it 1% up in KURV and 1% down in Apple. Let's look at Facebook. That's the big winner here. So they were 9.43 total return. Where is Meta? Maybe, what do they call theirs? Maybe they don't have that one. I selected that one thinking they had it, but it's possible that they really don't. So my bad on that. All right, Google, obviously those are there. Let's look, and usually KURV wins this one. Yep. So here's KURV. Whoops, it's not the KQQ. Here we go. So 3 month total return, they're neck and neck, -3 and -2, with YieldMax winning by a percentage point. So that is interesting. Look at the 6 month total return. It's just ugly. I mean, for Google, -1, -4. But here's where YieldMax is doing worse. And they did it worse here because they're paying more yield. But look at this. Their NAV on the 6 months is -19 to -10, -21 to -2 on the two Googles. Let's see, how did they do in the 12-month? Look at that. Yeah. So in the 12-month, Goop from KURV made 14.21 total return, and they were slightly under 10. Call it 10. So I think YieldMax is doing better. Let's look at the Netflix. And oh yeah, they're next to each other. Awesome. Okay. So YieldMax won in the 12-month, 44 to 37. And then Tesla is the ones that I want to look at next. On the 12-month NAV, as you can expect, KURV had a positive NAV and YieldMax had a negative, right? On the 6 month, what were the total returns? Pretty close, 29 to 31. So two percentage point. Those are pick them. But again, the stability of the NAV in their Netflix. And look at this. As I showed you earlier, these are the same. I mean, call that dead even. The 3 month. This is within 2%. Now this goes to 7%. Not quite 7. A little over 6.5. So they're good, solid funds. Now let's look at one that they win every time on KURV. So KURV's Tesla. So here we have a 3 month yield. Let me go back just a hair. So look at this 3 month yield. KURV, or no, they're so close, 1350 to 1327. Whenever that happens, there's a good chance that KURV has won the total return. And if you look on the total return, they have. The 3 month total return, even though they both had decent yields, YieldMax down here on the bottom lost 14. They have a hard time with the Tesla. And Curve, surprisingly for a 3-month total return, they had a minus 24 NAV. I mean, Tesla's been beat up. You guys all know that lately. But it was 39% negative versus 24% negative. And they out yielded them 24 to 13, but they didn't win the 14 to 10. And then look at the 6-month situation. Total return for Curve 1722 to 1408. And let's look at 12 months, not even close, almost 3 times. So you had in the Tesla fund, Tesla in YieldMax, you had, call it 50%, 49.49, 50% downdraft, and you only had an 8% downdraft in Curve. So they won 2760 to 1050. So call it 28 to 11. That's almost 3 times the total return. So, Curve's respectable. They can be a good fund. You kind of know what you're going to get from them. It's not as aggressive, in the call writing. All right, guys. Let's look at the two Microsofts. Typically, that one's interesting too because they're next to each other, MSFO. So on the 12-month, they're close. You got a minus 1% and minus 2% on the 12-month total return, with YieldMax winning. Oops, no, sorry. Minus 2, yeah, to minus 1. And then on the 6, let's look at the 3-month. YieldMax on the 3-month. So Curve won in the 3-month total return. Both were negative. They had a minus 6 versus a minus 7.5 from YieldMax. And then you had a Curve had a on the 6-month had a minus, call it minus 2 to minus 4. So Curve won every comparison in total return. Not massive like they do on the Tesla fund. All right, guys, that's what I got for you. Um, and like I said, I'll be doing this a lot more when I get these indexes from YieldMax. When YieldMax has a few payments, we already know about Roundhill. We got Neos; they're paying monthly. Got a lot of other SPY and QQQ income fund. So I got a big long list to show you, and yields and comparisons. So hang in there, guys, in the markets right now. I would say go out, maybe get some KQQQ from YieldMax, where you get an income fund, but you get some protection on the downside. I got a lot more for you on that over the weekend. All right, guys, bye for now. Again, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Have a good one. Bye for now.